Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month nickel. The break higher during Christmas week saw a significant release of bullish energy that had been pent up for about 2 years. This led to a complex coincidence of patterns over January of a quad top with individual pipe top and horn tops in there, and the main pattern being a January-based ascending wedge pattern. The break lower from this pattern happened late 9 weeks ago. The market reached the primary downside target at 17,400 on the same day. However, the much harder to reach secondary target X1 still stands down in the 16,075 zone. However, as far back as 7 weeks ago, I started questioning this secondary target and saying, and I quote, "This secondary target may be unobtainable for this pattern," end of quote. This is still the case now, but I will maintain target X for a few more weeks as we went from an ascending wedge pattern straight into, at the end of January, into another similar setup, into what originally was a bright red February-based possible ascending triangle or ascending wedge pattern, but which have now exited into a third pattern, a wide, shallow, also bright red bull channel, currently 17,028 to 18,359. That could conceivably be part of a very large late January base through to today bearish halfway hesitation, with potential down as far as the 15,750 zone. Once again this week have not triggered any of the patterns as yet, as we have, as I said 5 weeks ago, stayed above the 50% Fibonacci line at 16,515. That's really a key level. It is late February to date, descending expanding wedge pattern, which is currently at 15,954. That one is at 15,954 to 17,541. Now, I've not highlighted this pattern as yet. This is the new pattern that's developed, as there are enough colored lines on this pattern, and I would not wish to make it any more confusing. But this pattern does have merit, as it already has the 5+ touches necessary for the pattern to be justified. So what have we in the way that could influence this market? Well, below we have the obvious 50% Fibonacci line already mentioned, which has just above it the rising mauve medium moving average, currently 16,614, which helped halt the market's decline 2 weeks ago. And just below the 50% Fibonacci line is the bright pink neckline, currently 16,429 of the July to November 2024 head and shoulders top. Under this neckline we have a free zone all the way down to the rising gold long moving average, currently 15,917. Meanwhile above we have the curling lower green short medium moving average, currently 17,539. That is right now coincident with the upper trend line of the descending expanding wedge pattern. I'm not sure about this green short medium moving average, but the upper trend line, well, that does look useful. LME 3-month zinc. After having so many patterns here all acting all at the same time, we are now down to just a few. The key original pattern here is the bright red May 23 to April 25 bullish Andrews pitchfork. We're in between the overhead bright red middle time, which is currently at 3,400, and the bright red lower time below, currently at 2920. Closer, we have the almost flatlining mauve medium moving average, which is currently at 3194, which was acting as resistance 2 days ago, but yesterday and today has pushed up over, halting just around where the June 2018 high is, to 3220. Now further above we have the also flatlining green short medium moving average, currently 3281, which is entwined with the October 2024 high right now at 3284. The earlier drop we saw in mid-March was caused by the drop down through the lower bull channel line of the steeper mid-December 2025 to March 26 imperfect, steeper bull channel. We had targets below for such a break of a primary target X down in the 31.89 zone and secondary hard to reach target X1 down in the 31.29 zone. Both were achieved mid 2 weeks ago. These targets also go for the other pattern we had here before, which was the late January to end of March triple top pattern. So where has that left us all? Well, the fall in mid-March has opened up an interesting question due to the interesting range we saw 2 Mondays ago. Is that action a possible double bottom based on the support of the rising gold long moving average? If so, then we have potentials, not targets yet, but potentials, because we've only had the one close above it really, of a primary potential in the 32.92 area, which is not that far away, and a secondary hard to reach potential in the 33.41 area. It'll be interesting to see if this plays out, as in a way is the broken but possibly still effective broken lower bull channel line, which we're approaching at the moment, currently at 32.46. The old broken July 25 to March 26 bull channel. It'll be interesting to see how this all plays out. LME 3-month tin. The big recent pattern here started as a January to mid-February head and shoulders top that developed into a January to March double top. Both patterns failed, as the first did not break the neckline, currently at 39.385, and the second, well, after triggering a pattern 2 weeks ago, found it could not overcome the even bigger and longer term pattern here. And this is a really big one. Prices could not establish themselves below the bright red neckline, currently 41.025 of the huge, bright red, very shallow 2020 to 2022 bullish shift pitch hawk. Prices have since rebounded up through the trigger prices, which I notionally call the 50% Fibonacci line, the April 25 to January 26 move at 43.985, as well as over the rising mauve medium moving average, which is currently at 45.440, and up into some congestion generated by the big double top from the lesser Fibonacci line at 47.540, up to the 2022 high at 51.010. Within this congestion lies the now curling lower green short medium moving average, currently 49.015. And I would suggest focusing attention on that on any rises. So what are we left with? Well, somewhat surprisingly, action over March has left us with a huge monthly key reversal down. This is a longer term pattern, but it still tempers any overt bullishness out there. Additionally, last weekend this has created a small, acute rising wedge pattern, currently 45.830 to 47.775, highlighted in dark blue on my daily chart. Now, bearing in mind the rising nature of this market, or this pattern I should say, it would have an onus to break low, though such patterns can break in either direction. Additionally, we're more than 2/3 of the distance down the wedge pattern, so the likelihood of false breaks is well out there. But I can give an idea of the potential as this pattern works its way through. Thus, an upside primary potential will be plus $47.65, $4,765 above the confirmed break, and a secondary hard to achieve potential will be plus $7,560 above. A downside potential will be in the minus $2,420 below the confirmed break, and a secondary hard to reach potential will be, well, down where it started at 45.55, or more likely where the long moving average would be at the time, which is currently at 39.975. I'd be interested to see how this small pattern plays out and its effects on the larger picture. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.